Hi, this is Susan Shoemaker, and I am here with Bob Graham, President of Riggs Asset Management. And we are here to talk about January. Although we're only 1 month into the new year, a lot of important things have happened in this month. We've gone through a majority of earnings reports. We could talk about the indicators, how January gives us some indication for the rest of the year in election year.
In election year, yes.
And really specifically about some of the things we're hearing from the earnings reports that we've already seen.
So, thank you, Susan. So as you know, we're probably 80% through most earnings at this point in time. And for the most part, the earnings have been pretty good. I mean, I think very good in certain areas. Certainly we're seeing very good earnings in industrials, especially those that are tied to things like infrastructure, reshoring, nearshoring, and those that are tied to data center build-outs. We're going through a massive build-out in this country of data centers.
Bob, if I could interrupt you, I'm going to talk about data centers for a minute because we go back and forth with the technology we use or the technical term we use, but we talk about the cloud.
Yes.
So where is the information and are we looking up for it? Is it actually stored somewhere?
It is actually not in the cloud, but I will give you an example. Right now, we're building literally dozens of new data centers here in the United States. And by the way, we're building data centers, or they're building data centers in Europe and Asia at the same time. So if you want to think about it, think about a building that is 300, 400, maybe even 600 acres in size, filled with computers that needs very, very, very high degrees of reliability for energy, electricity, very, very high degrees of extraordinarily clean water to clean and take care of the facilities, and needs access to the data, the inputs. Where are they coming from? So right now we're seeing build-outs throughout the United States, but interesting article that I just read talked about 2 that are being built in Phoenix. One is literally on a building on a 600-acre parcel of land. And next to it is another one on a 400-acre parcel of land. These are massive metal buildings, and they are scattered throughout the United States.
And the data centers are important. People moving their information to the clouds because of the other really important thing is artificial intelligence.
Artificial intelligence, yeah. So, you know, one of the things that has occurred is that with the advent of artificial intelligence and the build out of this technology, the demand for compute, which sounds like a weird term, has expanded hugely. And one of the interesting things is that as these programs become smarter, they actually require more energy. They go back and do more compute. They take the same data and rewicker it to try to get a different outcome. So think about how that might affect the biotechnology industry, where you've got reams and reams of data on potential drugs that never quite made it past the finish line. Well, now all of those things can go back and be reevaluated with a different eye or a different level of technology to find out if there's not specific uses that may be valuable in the future. So the demand for compute, the demand for this data is going to continue to expand as the technology gets built out, but it's going to expand at an exponential rate.
Right.
And it's really amazing to see what's happening in the industry.
And it will also drive infrastructure, which is another one of the things that we've talked about, because the cloud is actually a structure.
It is a structure.
And it requires all of the things that we talked about that a building would require. And so those industrial companies are producing them.
Yeah, it requires all of those things, and in some cases more. It requires better HVAC systems. It requires, along with that, cleaner air, cleaner water. It requires energy that is never disrupted. Electricity, whether that's from existing, from what I'll call intermittent, like solar, wind, or the expand out of nuclear. We're seeing a demand for uranium, as you know, expand dramatically because of the demand for nuclear, because of the increase in demand for energy across the board.
Right. And that data has to be protected. So also companies that provide that are going to be another probably reporting some pretty good earnings. The ones at the top will be saying the state is here, it needs to be protected. We're providing the software for that.
Absolutely. All these things are interrelated, and this is simply the environment we live in. And this is the area where we're seeing tremendous amounts of growth across the economy, but also across our portfolios.
Mm-hmm. So now we've had a pretty good January, as you said. We've had a lot of reporting. We've heard some companies talk about those key areas. Let's talk about putting January in perspective in an election year cycle and what that most of the time means. Well, high probability of what that means.
Whenever we have had a presidential election and January has been positive, that year has been positive for the stock market. Mm-hmm. Every single time. I'm pretty optimistic for this year. I know it's going to be a turbulent period. Mm-hmm. I know there's going to be a lot of people screaming at each other about different things. But I think it's probably going to be okay for the bond market, okay for the stock market, and okay for our economy.
Did the Fed give us any insight to what the rest of the year might be like in terms of the environment for interest rates?
Well, I think the Fed was, yes, we're going to be cutting interest rates. We'd prefer not to do it in March. Mm-hmm. But right now, they have 3 interest rate cuts on the board. I think they'll probably do 3 interest rate cuts, maybe more, we'll see. But the bond market right now has been rallying very strongly and is telling us that the Fed is likely to start cutting, mm-hmm. most likely sooner than later, but for sure this year.
Great. And that influences all the things that really impact people quite a bit, which is, some of the lending are pegged to some of the key rates. So what we haven't seen is the housing market come back full force because of higher rates. People buying cars, people financing, those things will all get a positive boost if we see those interest rate cuts this year.
Yeah, absolutely. When interest rates come down, the cost of money comes down, people can borrow more money, they can afford more homes, they can afford a new car. Those tend to be beneficial to the economy. They take some time to work their way in, but overall, a lower cost of money is a benefit to pretty much every American.
Great. I think we covered everything.
Great. Thank you,
Thanks.
Susan.